Good afternoon, and thank you all so much for joining us today for our third episode in our Amfin webinar series. My name is Maya, and I'm the Perth-based Relationship Manager, and I'll be facilitating the session for you today. In this session, we will be exploring loan options for sole trader clients. I can see by the list of attendees that we have many of our existing partners who have already logged on, as well as a few new faces, so welcome to everybody. We really appreciate you taking the time out of your day to log in and spend the next 30 minutes with us, unpacking the options available for sole trader clients. This webinar, being a more straightforward topic, will be shorter than the others to ensure that you get the quick facts to discuss options with your clients today. As always, all of our relationship managers, including Alex in Victoria, Phoebe in New South Wales, and Holly in Queensland, as well as our Head of Growth, Tess, are online. They will be monitoring the chat function, so please ask lots of questions and interact along the way, and we will tackle your questions either as we go or at the very end. Before we move into our agenda, a key difference in this session from our previous ones is that everyone online will receive CPT points as a thank you for supporting our web series. Be sure to stick around until the end so that you can get your codes. So with our agenda, we'll be starting today with a definition of a sole trader so that we're all on the same page. We'll then move into an overview of consumer versus commercial loans, followed by a more detailed overview on why we would select either of these for your client. Finally, we'll provide some tips on how to best prepare your client and the next steps on how we can support you with your business clients. Feel free to interrupt me along the way with any questions. As mentioned, the whole team is online to answer any questions that you may have. So how do we define a sole trader? I appreciate that a lot of you are clear on the definitions, especially our accountant and financial planning partners. However, this may assist anyone who's new to industry. A sole trader is actually a business structure. It's the simplest and most affordable, which is why it is so common. One person runs the business and is liable for the business in its entirety. A self-employed person, however, is employed in a different business structure and they are an owner or a director of that particular business. There may be multiple stakeholders in this instance, and the business is subject to business taxation as opposed to personal taxation. Critically, the sole trader operators, they operate under a personal income tax bracket, which means when comparing commercial and consumer loans from a tax perspective at face value, there is very little difference unless the business is eligible for small tax incentives, schemes, and GST offsets. We strongly recommend that all sole traders understand their options available to them by speaking with their accountant in order to make the best decisions for themselves and for their business. In most cases, a sole trader will require initial equipment, vehicles, fit out, or cash funding to get them started. So can I just get a show of hands or show of virtual hands to see how many of you regularly work with sole traders? Cool, so there's a couple. Great, so a few of you. So that definitely means that as we go through, you'll be able to see how we operate from our end to make sure that we can best service your clients. And hopefully for those of you who haven't had a lot to do with sole traders, this will then give you the confidence to step into that space going forward with our assistance. So now we'll talk about how to get a sole trader loan ready and what documents you will need. I've detailed in this slide the key things your sole trader client will be required to provide when looking for finance. Both require basic ID, so their income tax returns as well as a notice of assessment. Payslips are not an acceptable form of proof of income for compliance reasons as it's not at arm's length. Two key differences are that when a lender requires bank statements, consumer loans will request personal statements, and commercial loans will request company statements. Finally, for commercial loans, the GST and ABN age is required and will often dictate what policy is available for the client. To give you some insight, we have options for asset finance in the commercial space as early as 3 months or 1 year ABN and GST registered, whereas most lenders will not accept commercial loans until the ABN and GST is 2 years old. However, as always, there is an exception to some of the rules. In this instance, where the client has a really strong business continuity in a particular trade or industry, the lenders are quite happy to consider this as well. So, for example, if a plumber was working for another plumber and they've decided to go out on their own to service similar clients, lenders are more than happy to explore this option. Further to this, for your basic asset, when it comes to insurance, comprehensive insurance will be required for both instances. However, as a commercial client, there may be benefits of bundling this in with existing insurance plans. Now that we understand the basics in documentation, here are the key reasons why a commercial loan may be better for your sole trader client. The first reason is low doc loans. Low doc is something that I'm sure a lot of you are familiar with, but to summarize, for assets under 150,000 in total borrowing amount, we can take advantage of an easier and smoother process for a business to borrow money with ease. The key thing with low docs is that they don't require full tax financials from the business. It's based on bank statements and incoming cash flow. So this is much simpler than having to provide full profit and loss statements, which the sole trader may not have as yet. Higher borrowing amounts may be available for unsecured commercial lending compared to consumer lending. It's normally for business lending and is based on business bank statements for loans up to 250,000, and other options are available for borrowing amounts as large as 500,000 or above. Comparatively, in the consumer space, the majority of unsecured lending is capped at 62,000 per loan. Third benefit is that rates can be lower for commercial clients depending on what the market is doing at the time in the asset finance space. Currently, we're seeing commercial rates around 0.5% lower than our base consumer rates. Interest can also be calculated differently on a commercial loan, as it can be calculated upfront as opposed to on the remainder of the loan. This means that breaking the contract early may be cheaper in the commercial space than it is in the consumer space. Finally, the good stuff sits with the accountant's expertise on what benefits are available to the client. If the overall loan is higher, but it means that the client is eligible for a grant, subsidy, or offset, then you always want to look at the better off overall test when it comes to financing as a sole trader. It's important to note that the credit score of the business owner in either circumstance is what's taken into consideration. So this is going to be the same regardless of a consumer or commercial lending. So commercial lending sounds pretty great, but it is always nice to have other options. This is where we find some key opportunities in consumer loans for sole traders. The first benefit here is around the ABN and GST registration. Often, small businesses do not understand the impact of their ABN age and GST registration status. In some cases, a sole trader registers an ABN but doesn't register for GST until they're trading in higher denominations. Not being GST registered definitely limits options when it comes to commercial lending. So comparing consumer options in this situation is the right thing to do for your sole trader. Similarly, the ABN age has an impact on rates and possible lenders. So putting consumer loans on the table here also provides more comparison. Again, when looking at these options, it's important to look for what is better overall. For example, the rate may be cheaper in a consumer deal, but the tax offset available in a commercial situation from an accountant's advice perspective may still make the commercial loan better off overall. Secondly, there may be differences in bank statements. Perhaps the business statements aren't thorough enough, have defaults, or are inconsistent. Applying under consumer loans with consumer statements may be better if this is a healthier profile for your client. When we are looking at cash flow lending, consumer loans may be better than commercial loans due to the rates. Unsecured lending commercially averages from 18% to a 22% rate, where consumer lending averages from 8 to 15%. It's important to note that a personal loan is capped generally at $62,000, but that may be all that the client needs to get started. So as long as the client can demonstrate serviceability, it may still be an option for them. Finally, you'll want to look at the business usage of the asset. Your client may not have a choice between a consumer and commercial loan after all. If the use of the asset is mixed and less than 50% of it will be used for commercial, then your client will be required to take out a consumer loan anyway. The team and I will just take a minute to answer any questions so far from the floor. So if there are any questions up until now between the different types of options available to your clients, please take a moment to just pop that into the chat box. Or if there aren't any, that is totally okay as well. Cool. So as promised, a checklist for you to cover off when your clients, with your clients when you're looking to identify which loan is going to be the best for them. But here are a few key points. If the ABN and GST has been registered for at least 2 years, this is a very vanilla deal, and we would be looking at a commercial deal in the first instance. If it's under 2 years, then you'll want to warn your client that the rates are likely to be higher, and you'd then want to go and compare the two different types of loans. If the ABN and GST registration is less than 3 months old for asset or 6 months old for cash lending, and they can't wait at least 3 or 6 months, then their choices will be limited unless they are part of a franchise, in which we have some interesting franchise startup policies available. We've discussed the difference in bank statements already, but it's something to consider before lodging if there are going to be some challenges with them. Given that the credit score is one and the same, a sole trader having a knockback in one type of loan before applying in the other certainly will have adverse effects. Objectives with the accountant are a must to cover, as consumer lending may not be an option at all if there are specific kickbacks that warrant the purchase in the first instance, depending on the structure of the business. Finally, you want to know what is available in terms of documentation so that we can make decisions on low doc or full doc loan types, particularly in the commercial space. So last opportunity for any questions. Please feel free to use the chat box. We'd love for you to get busy in there and ask any questions that you might have. And the team and I will be able to go through that and respond. While you are getting your questions in the chat box, if there are any, here is a reminder as to who your dedicated relationship managers are on the screen. Feel free to take a screenshot of your contact so that you can reach out to them for the next steps. Cool. Team, do we have any questions in the chat box popping up, or we're good?
No, none yet, Maya. I know you're going to go straight to the CBD points if none pop through, but if anyone does want to stay on at the end, obviously, because we've kept it short and sweet for you today, just to chat about the market at the moment. If you want any updates around asset delays, we're seeing obviously a lot when it comes to cash flow with either businesses or personal circumstances changing because of all the rate rises. So if anyone does want to stay on and just chat to our RMs or Maya or myself about any of that market stuff, feel free to stay on as well.
Thanks, Tessa. Excellent. So as mentioned at the beginning of the session, everyone who has attended today is eligible for CBD points. So please make a note of the details up on the screen. Our next webinar is going to be on the 3rd of November on the topic of ABN and GST registration, new business lending. We will send out further details when we send the follow-up email from this session as well. We look forward to seeing you there and joining us and continuing to support our web series. And like Tessa mentioned, you are more than welcome to stick around online and have that conversation about our sole trader options and go through that a little bit further and what's happening in the market. If not, thank you so very much for joining us, and we look forward to seeing you next month.